What's up everybody, I'm Jaspreet Singh and you can break down wealth into a simple formula. Your income minus your expenses equals your investments plus your savings. If you understand this wealth formula, you will know what you need to do if you don't want to be broke again, and you'll know what you need to do if you want to actually become wealthy, because what wealthy people are doing is they're working to increase their income while lowering their expenses to increase the amount of investments that they have, because your investments are what will make you wealthy. Your savings are there to protect you from an emergency. Your expenses are there to make you look rich. They're there to give you that nice life. So you have the nice home, the nice cars, the nice vacations, all that nice stuff. But now it's understanding how do you optimize the income and the expenses so you can have the most investments. That way you can become wealthy. And everybody thinks that they have an income problem. When they're trying to become wealthy, you assume that if I just made more money, that I'll be able to become wealthy. But the reality is, for most people, especially in the early stages of trying to become wealthy, it's not an income problem, it's an expense problem. Because what you're doing right now is you're spending all the money that you're making, which is why you have no investments, which is why you have no savings. And what you need to optimize in the beginning is how do you manage your expenses. Once you know how to manage your expenses, then it's about how do you manage your income. After you know how to manage your income, then it's the third thing, which is how do you invest your money. Now, once you know how to manage your expenses, your income, your investments, then it's what do you do now to learn the system. This is including now how do you save your money the right way, but how do you now understand the system? That way you can use the system to your advantage. For example, right now you see me with this New York scenery behind me. Well, I'm here in New York for a business trip, but it's also tax deductible for me. So I get to go on kind of a vacation. It's a work vacation, but it's also a tax deduction for me. So you got to understand how to use the system the right way. And I'll be talking about that. And the fourth step, at number 5, is you have to be able to break down your own barriers, understanding your mindset. So let me start by talking about number 1, which is understanding your expenses. Because what happens to so many people is you assume that if I just made an extra $10,000 a year, that my financial problems will go away and I will be wealthy. But what ends up happening to so many people is you go work harder, you go and get a raise, you get a promotion, you get a bonus, but then now what you see is your income goes up, but then all of a sudden your expenses, boom, go up as well. So your expenses then increase with your income, because now you assume that if you make more money, you have to spend more money, because we always tell ourselves that, okay, if I just made an extra, 10 grand, that I'll be able to be more free, I'll have more money to invest. But what happens practically is you make this extra money, now you want to celebrate, you want to show it off, you want a new car, you want to go on a vacation, you need to upgrade your lifestyle. But the simplest, not the easiest, but the simplest thing that you can do in this stage is when you increase your income, don't increase your lifestyle. Don't increase your expenses. And this is much harder to do than just to say it, because you work hard, that way you can have a nice lifestyle. That's why we work hard. That's why you make money. And so you can have your dream lifestyle. But now when you're making more money, but you're not upgrading your lifestyle, now you feel like something's missing, because everybody else around you is driving a nicer car. They have the nicer home, they have the nicer stuff, and they might be making less money than you. So you might be wondering, dang, what am I doing wrong? Because this person, my friend, cousin Bunty, whatever, whoever, they're making less money than I am, but they have nicer stuff. But this is where now it's that decade of sacrifice, where if you were willing to put in, a decade of willing to live below your means, of just really putting in the effort, where now you're putting aside that extra cash, well, now you're setting yourself up for real financial wealth, because now you have this barrier which you can invest, which you can now put to work, which will make you wealthier. That way now you don't have to work as hard, but you have more money coming in. So the first thing you have to do is you have to master your expenses. The second thing that you have to do is you have to grow your income, because now what happens to a lot of people is you get stuck in this mindset of trying to squeeze every penny out of your pie. You're making 40 grand a year, and now you're putting aside 25%. You're putting aside $10,000 a year for your investments and your savings. Remember, your income minus your expenses equal your investments plus your savings. And so now you're working to lower your expenses. So you have more money going to your investments and your savings. But now what you're saying is, I want to put more money towards my investments and my savings, because you start to fall in love with this whole idea of financial education. You start to fall in love with the idea of working to build wealth. And so now you look at your income as a pie. You're making 40 grand and you're putting aside 25%, and you want to get more aggressive. So what do? Well, now you're like, maybe I can put aside 30% of my income or 35% of my income. So now you're working, instead of just putting aside 10,000, you're trying to put aside 11 grand, maybe 12 grand a year. So you're limiting your pie. Now you're really starting to cut back on your expenses even more aggressively. You're not going to Starbucks anymore. You're not drinking the whatever. You're not eating the extra guac. I mean, you're cutting back on everything, on the things that you might even like. That way you have more cash to invest and you have more cash to save, which is fine. But you don't want to start living in this limited scarcity mindset where the only way that you can put more money towards your investments and your savings is by living smaller. Because the other way that you can put more money towards your investments and your savings is by actually earning more money. It's by increasing the size of the pie. Because now, if you try to go from 40 grand a year to $400,000 a year, and you keep that same 25% going towards your investments and your savings, well, now you went from putting aside 10 grand a year to 100 grand a year. Way bigger than if you squeezed a few more pennies out of your pie, but now it requires that growth mindset, because most people hear this and say, Jaspreet, what are you talking about? How am I gonna go from 40 grand to 400 grand a year? There's no way my boss is gonna pay me that much. But it requires you to first have that mindset to believe that you can do it, because if you don't believe that you can do it, I 100% guarantee it's not possible. You won't. I'm going to talk about this more a little bit towards the end of this video, but you have to first believe that you can do it, because now if you believe you can do it, then the next thing that you're going to do is you're going to start learning. How do you do it? Maybe you start watching YouTube videos. Maybe you start reading books on how to increase your income, or how to start a business, or how to start a side hustle. Maybe you purchase a few classes and then you start doing, and then you start taking steps towards that action. And maybe you don't hit 400 grand a year, but maybe you get to 150 grand a year. That's still quite a bit more than $40,000, but it requires you to first think that you can and start putting in the steps. That way you can start earning more money. But the reason why expenses come before income is because if you don't know how to live below your means, if you don't know how to reduce your expenses, it doesn't matter how much money you make, you're going to continue to be broke. And it doesn't matter now whether we're talking about 100 grand or a million or 10 million, because if you don't know how to master and use your income, you're going to be broke. This is why so many multi-millionaire NBA players have ended up broke or bankrupt within the first 5 years of them leaving the league. This is why so many NFL players have ended up broke or bankrupt after leaving the football league, after leaving the sports association. And it's the same reason why I have so many lottery winners that end up broke or bankrupt within 5 years of winning the lottery. And now you're even more miserable after having the money and losing it, because now you have the pain of having something and losing it, as opposed to just wanting this money. And so this is where you have to know how to spend your money, and then you got to know how to earn your money. This brings me to the third thing that you have to master if you really want to know how to become wealthy and never have to worry about being broke again. The third thing that you have to understand is, now how do you invest your money? Because this is where real wealth is built. Because what wealthy people are always working to do is they're always looking to buy more assets. See, most of the time when we think about spending money, we think about buying nice things. I'm gonna go and buy myself a nice pair of shoes. I'm gonna buy a nice car. I'm gonna buy this. I'm gonna buy that. A nice vacation. But none of these things put money in your pocket. There's nothing wrong with having nice things. But what wealthy people are doing is they're always thinking about, first, how can I buy something that's going to pay me, and then use this thing that's paying me to buy my lifestyle. And this is the type of mindset that you want to start building, where it's now, how do I invest my money first? Because wealthy people are always paying themselves first before they go out and buy a whole bunch of other nice liabilities, a bunch of nice luxuries. So you got to start asking the question. Now it's, how do you actually put it into action? Because there's a lot of different ways that you can invest your money. You can invest your money into stocks, probably the most accessible way and most proven way to invest your money. You can invest your money into real estate. This is buying things like apartment houses or homes that you're not buying to live in yourself, but to rent out to other people. You can invest in crowd-funded real estate, where now if you don't want to go out and actually buy a whole property, you can invest into a fund that's giving you exposure to real estate. You can invest in startups. These are companies that are looking for investments, high risk, high potential reward, because most startups will fail. You can invest in cryptocurrency. You can invest in precious metals like physical gold. There's a lot of different ways that you can invest your money. And this is now going to depend on what are your goals. I invest my money in 5 places. I invest my money in my own business, market briefs. I invest my money into startups. I invest my money into real estate. I invest my money into stocks. I invest my money into cryptocurrency. And then I invest my money into physical gold. And so for me, my business and startups are my biggest investment. I invest my money into market briefs to help grow the company, and then startups that I believe in, that I want to be a part of. Then I invest my money in real estate for cash flow and for legal tax deductions. Well, I invest in real estate for the cash flow, but it comes with the tax deductions. Because now when I invest in real estate, I own a property, and then there will be tenants that live in this property, and then every month these tenants and the properties pay me for owning it. And it is now passive. It wasn't passive when I first started. It was a lot of work when I first started, but now it has become much more passive. Then I invest in stocks. I invest in stocks by, for one, investing in ETFs every week. An ETF is an exchange traded fund. It is literally a group of stocks. And so every week I have a system where money leaves my account and is automatically invested into a number of different ETFs that give me exposure to many different sectors across the stock market. And this happens whether the market is up or down. And then generally, I also have an active stock market strategy, which is where now I'm looking for opportunities. If I see a stock market crash, if I see the stock market fall, and the price of a good stock that I want to own falls, I will come in and buy. I'm looking for the right opportunities. Fourth, I invest in cryptocurrency. Just like with stocks, I have a passive method where every day I buy some Bitcoin, I buy some Ethereum, and a couple of the other coins. And this happens whether the market is up or down, it does not matter. This is automatically happening. And then I also, if I see a big downward movement, a huge downward movement, I might come in and buy actively some Bitcoin or Ethereum or a couple of the coins that I believe in. But for me, I do understand that cryptocurrency is much more speculative. That's why it's a much smaller piece of my portfolio. I understand the risk, and so if it goes to zero, hey, I'm okay with that. But I also understand and believe in the upside, which is why I'm buying it. If you don't believe in crypto, if you don't understand it, don't buy crypto. Only invest in the things that you understand. Otherwise, you're going to be one of the people that ends up losing their money because you're just throwing your money around trying to find the next get-rich-quick scheme. And then I invest in physical gold. And for me, this gold investment that I have is not a way for me to really get a return. For me, it's insurance. It's another form of saving, because now when I save gold, it's a way for me to save hard money, and I have a passive system for gold, just like with stocks, just like with crypto. But now every month I'm buying a little bit of physical gold, and it's completely passive. That's how I invest my money. But now you got to figure out your right strategy for you, because you might have a different mindset, a different goal, a different risk tolerance. And based off of that, you're going to start making your own portfolio. You're going to start making your own investment decisions on what's important for you. Maybe you love real estate and you go down the real estate path and you do 100% real estate. Maybe you hate real estate and you don't do any real estate. And so you got to figure out what's right for you and understand the risks and the not risks for doing what it is that you're doing. Now, if you want to learn more about how do you actually invest your money, there's a free guide that I put together on how to start generating passive income through your investments. If you want to read this guide, learn more about how you can start generating passive income, it's completely free, and I'll put that guide for you down in the description below. This brings me to number 4 now, is learning the system. And this is one of those things where it is so crucial. And this part especially, we're never taught. Like maybe you've been told at some point, invest your money or save your money, live below your means. Like these are things that we're told. We're never taught how to do it, but we might have been told this. But most of us are never taught about how the system works, that we can use it to our advantage. And the biggest example that I can give you of this has to do with the tax law. Now, I'm telling you this from the perspective of an attorney, because I am a licensed attorney, and I never wanted to be an attorney. I went through law school and all of my schooling because my parents really wanted me to become a doctor. And they're immigrants from a state in India called Punjab. And when you come to this country with very little, you don't know the language, you don't know the culture, you don't know anything, you want your kids to become successful. And the traditional path is go to school, get good grades, get a good job, and then climb the corporate ladder. And that was what my parents pushed me to do because they wanted me to become successful. And that's the proven path to become successful. But along the way, I started learning that that wasn't right for me, and that wasn't what I wanted to do, and that I could become more financially successful by doing something different. Now, my parents weren't very happy because I was kind of being a rebel by not becoming a doctor, and I wasn't super successful. I had nothing to really show. I just knew I wanted to do something different, so they were like, you have to at least go out and become an attorney to maintain any pride in the family. Now, I love my parents to death. This was just their way of trying to do the right thing for me because they didn't have the right financial education either. And so I said, okay, I'll go to law school because if I go to law school, I can work on my businesses full time. And that's what I did. And when I was in law school, I spent a lot of my electives taking the business and tax electives because that was at least interesting to me, and I thought that maybe I could apply this one day. And the interesting thing that you learn, especially when it comes to the tax code, is that the tax code benefits certain people more than others. And now you can hate it, you can love it. What I'm trying to say is, this is what the tax code is. It's thousands of pages long. Understand how to use it, because at the end of the day, the biggest expense for the majority of Americans is your taxes. Because now not only are you paying your federal income tax, you're paying state income tax. Some of you might be paying a local city tax depending on where you live. You pay sales tax, you pay property taxes. There's a lot of taxes that we pay. And that's fine. It is what it is. But now the question is, how do you legally minimize this expense? Because there are ways to do that. And before, I used to work with a tax accountant who was really just filing my taxes. He would go through my bank accounts and whatnot, and he would just put together some reports and just file the taxes, and he would always do this late, and it caused a bunch of issues, but he never did any sort of tax advising. Now I have a much better tax advisor who I work with, who meets with me regularly. I mean, we meet almost every month, where now we're meeting regularly, and he gives me actual, he's looking at my P&Ls, he's saying, all right, here's what your tax liability is for this period of time, and this is what you can consider doing, because the rules and regulations for taxes change all the time. Like I talked about here, I'm recording here in New York City. I'm in Manhattan right now with Wall Street's right down the street over there. Beautiful part. But I'm here for work, and I like traveling. And so I've been able to kind of work this out where now I can travel and work, but it also becomes a tax deduction, because now when I need a place to stay, whether it's the Airbnb or a hotel, these can now become tax write-offs. I get to explore the city. I get to live in the city, which is something I've always wanted to do, but then it becomes a tax write-off if you know how to do it the right way. And I'm here with my business partner, and my business partner is my wife. And so, we get to come here, do business, meet really cool people, and it becomes a tax write-off. Also, in 2022, there's a special tax deduction going on, which allows you, if you are a 1099 contractor, if you are a business owner, to deduct 100% of your meals from your taxes. There's not typically a 100% deduction, but because after the pandemic, the presidential administration wants people to go out and eat at restaurants, because restaurants were hit so hard, they created a 100% meals deduction. So if you're going out to eat with your team, you're going out to eat with employees, that you can now deduct these business meals. And so we get to now eat in nice restaurants in New York, have these nice business meetings, and they become fully deductible. There's so many different little tips and tricks that you can use to now fund your lifestyle and have it be a tax deduction, but you have to have the right advice. So for one, have a good tax advisor. Now, at the very least, use some sort of tax filing service, because if you don't have any side hustle, if you don't have a business, it's going to be harder for you to take advantage of some of these things. But at the very least, have somebody who's going to help you file your taxes and at least maximize your deductions. Because if you're not doing this and you are literally just leaving money at the table and overpaying the IRS. And so, there's different levels to this where, if you're not making a ton of money, if you just have a job, then you don't got to pay 10 grand a year for a tax advisor. Okay. So you kind of just have to find the right level. And the more you earn, if you have a business, the more complex things get. This is where you want to be investing more money into your tax advisor, because I pay a lot of money for my tax advising, but it's worthwhile for me because it helps. It pays for itself. It limits the taxes legally, but then it pays for itself through the deductions that I get. And so this is where now you have to just understand what it is that you're looking for, but understanding now how do you use the system to your advantage, because the IRS is literally just a rule book. It tells you what you can do and what you can't do, and you want somebody who is an expert at reading this all day and night long, who will tell you, hey, do this, don't do this. Now, just along with that, you also want to understand now the system where many of us, myself included, I was told, hey, the way you become successful is by going to school, get good grades, get a good job, and then climb the corporate ladder. But now it's understanding the different mindset where you don't have to go down the traditional route, especially in this day and age, where now there are so many different ways to earn an income. Like this video, I'm recording from Manhattan in my hotel room. I had an Airbnb, but it didn't work out for whatever reason. So now I'm here in a hotel, and I'm recording this video from here, but I'm also working. And so now it's a new way to work, and there are so many different ways for you to earn money, but you have to understand the system, where it's not just working to climb the corporate ladder. Maybe you can work to own the corporate ladder. This is what wealthy people are doing, and understanding that there are so many ways to do this. And this is where now you have to start breaking away from what the majority of people say, what the majority of people do, what the majority of people think, and start thinking a little bit differently. And this is hard because everyone's going to say that you're weird, that you lost your mind, that you're crazy, but you have to be willing to think a little bit different if you want a lifestyle that isn't like everybody else. Which also brings me now to number 5. You have to break your own barriers. You have to break through this mindset, because most of us have this, I call it the majority mindset, embedded in us, where we're told this is how life is supposed to be. We're told this is how we're supposed to live, but that's not always the case. And what I've learned from my experience is if you keep doing what the majority of people do, you're probably doing something wrong in 80 to 90% of situations in life. If you're doing what everybody else is doing, you're doing the wrong thing. And now it's all about, now how can you live your best life? How can you live your best life when it comes financially? How can you be happy? How can you be healthy? How can you be living the purpose that you want to be here for? But it requires you to start thinking a little bit differently, and then you have to believe it is possible for you. And this is one of the most difficult things to do, because you might think, I don't know how to do something else. I don't know how to do something different because I went to school for this. I went through the same thing. I was in college thinking I was going to be a doctor. I was taking all my pre-med classes. Nobody ever taught me a thing about investing or business or finance. I never grew up learning about investing. I don't have investors in my family. I didn't grow up with real estate investors around me. I didn't even know what real estate investing was until I started investing in real estate. I read books and then went out and did it. I made a ton of mistakes. But you have to be willing to break through your own barriers. And that means now you have to be able to believe in yourself. And this is very hard if you don't have the right confidence and the right self-esteem. And so you kind of just have to know, like, where along the spectrum are you? If you don't have the confidence and self-esteem to do something, then maybe start by working on that. Read books about how to build your confidence and your self-esteem. Watch YouTube videos on that. I might not have a ton of videos on it, but there are a bunch of people out there that have videos on confidence and self-esteem building. Then once you have that, now it's like, okay, I have my confidence and self-esteem. What can I do to invest my money? I have a ton of videos on this on my channel that you can watch, right? And so it's now understanding what it is that you do, because now once you believe in yourself, now it's all about taking action and trying and trying and trying and making mistakes and improving, because every time you make a mistake, you found another way that it's not going to work, and you just keep slashing out all the ways that it doesn't work. That way you can find the strategy that's right for you. And it requires that patience. It's like impatient patience, where you don't want to just be patient waiting around for life to just figure itself out. You want to be patient in the sense that you understand that it takes time for your money to grow and compound, but impatient in the sense that you're constantly working to make an impact, to improve, to get better returns. But you have to now believe that you can do it, because if you don't believe that you can do it, it's going to be impossible for you. So you have to believe in yourself. You have to work on the mindset, which is why I call this the minority mindset, because if you don't have the right mindset, you will never be able to succeed. All success starts with your mindset, and this is one of those things where everybody assumes that it's so easy. Yeah, you gotta have the right mindset, fine. But if you don't fully understand that, it is going to be impossible for you to go out and succeed. Your mind dictates your actions, and so now first thing that you gotta do is understand, hey, if I can increase the size of the pie, I don't even have to change the percentage of the money that I'm putting aside. I can just grow the pie, build that growth mindset, and now my percentage that I'm putting aside becomes so much more valuable because there's a lot more dollars that I can put to work for me.